Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals for our Friday wrap-up of this week's precious metals and what we think it might happen on Monday. Although I got to be honest with you, I don't even know if the markets are open on Monday. Shame on me for not knowing that. It is Columbus Day. But anyway, let's go over what's happened today. And man, what some surprises. As for us precious metals people, unless you were thinking about buying, it has coming up. What is it? Everything's coming up Millhouse. I kind of like that. If you're familiar with that particular cartoon, you are familiar with that saying. But for today, precious metals people, after suffering a hard week, if you're one of those people that watches every day and really freaks out about the downs, you got to be feeling pretty good about today. However, why? Why is the big question. Why was it up today? Why was it down last week? And the real question is, what the F? Not going to say it, Marcelo. I saved you on that one. But anyway, what the F? Well, here's the reason. We've been talking about this for a while. It's all dollar related. Primarily, I won't say all, primarily dollar related. Gold and silver and platinum, particularly gold, and I say mostly gold, are directly in correlation with dollar strength and dollar loss when the dollar falls. And that's exactly what we've been seeing happening. This makes a lot of sense. And there's those times in history when you see the bull markets that you can tie them to particular things. I remember in the 80s when people were tying the price of gold to oil. And maybe there was a correlation there. And it's been so long I've forgotten and have to look it up again. But there was a correlation amongst a lot of people between the price of oil and gold back in the 80s when we had that really, when the prices were just rising. And I'm sure interest rates as well and other economic things. And then the stock market seemed like it had some correlation with gold and silver. When the stock market was really doing hot for a while, gold and silver was not. Well, because people don't put their money there. They're not afraid. They don't put their money in gold and silver. They don't put any additional monies in gold and silver. I think you should always go in gold and silver, even when you're not afraid, just as a security and a hedge. However, let's move along to that. And anyway, gold soars above 1900 as the U.S. dollar plunges. This is what I've been talking about, folks. It's all about the dollar right now. This is why last night's homework was about the word fiat currency, and I wanted you, even if you think you know what fiat is, I wanted you to reread it last night, along with the Bretton Woods Agreement, or the Bretton Woods System, actually, look at last night's video. I'll explain some of that, and you need to be researching this stuff because it has a very strong impact on your precious metals holdings, okay? So those are the two subjects last night I talked about. If you missed last night's video, go read up on the Bretton Woods Agreement and read up what fiat currency is. Anyway, and I'll explain why you need to know these things and why this is important to this headline right here. Gold soars above $1,900 as U.S. dollar plunges. A good friend of mine, hold on, there's another headline from Wall Street. And you know what, here's something funny, is you won't see these great headlines that are really not full of opinion. They're just kind of like say it like it is about precious metals in the Wall Street Journal, CNBC, or other publications because they're strictly, oh God, I got to quit saying this, and maybe I'll just quit even reviewing the Wall Street Journal on here at all so I don't even have to talk about this. But you don't get good information in corporate media about gold and silver and platinum. Zero. CNBC, Wall Street Journal, none of them give you good information. So you're kind of stuck, and I don't want to say stuck, but you're out there looking for other sources on precious metals. And Zero Hedge does have some good sources. They have a few articles that are written by people that are just perma-bulls, but they're involved with precious metals companies that are always trying to sell you something, so you've always got to keep that in mind. However, trying to find gold and silver news and platinum news on mainstream media, corporate media sites and newspapers and TV, freaking impossible. Anyway, I didn't mean to digress, but I keep showing you Zero Hedge stuff, and I'm just explaining why. But anyway, it's pretty simple. I'm not even going to go into the headline. Stimulus hype short squeeze sparks best week for stock in 4 months. U.S. dollar dumps. More or less, I think Trump kind of opening up and saying that he's going to allow some sort of stimulus here. Just by saying stuff, he's got these algos running up and down. Meanwhile, if it has a direct effect on the U.S. dollar like it did today, U.S. dollar dumps. And I'm not sure that had anything to do with Trump either. That may be a lot of outside things besides Trump. So don't even put that in your mind. Let's just say for some reason, I'm not quite sure, the U.S. dollar did dump today, and that is the reason that we had our up day. And that will explain the what the fuck. Excuse me. You had to do at least one bleep, Marcelo. My apology. And again, I got an adult audience here. We're not a bunch of children out here under 18 that have never heard the word. I should say under 6 that have never heard the word in today's world. Anyways, gold soars above $1,900 as U.S. dollar plunges. After spike on 2 days after Trump's no-deal tweet, the U.S. dollar has been in a free fall. So according to Zero Hedge, in this article right here, they believe that Trump's no-deal tweet caused the dollar free fall. But you know what? I'm not quite sure. I think there's a lot more to it than just Trump, although he does have an effect on these really short-term markets. The dollar is in a fall for many reasons. And like I said, if you read last night's homework about fiat and the Bretton Woods Agreement, you'll know exactly what I'm talking about. Anyway, let's take a look at stimulus hikes, best week in stock. Okay, we just looked at that article. And, a friend of mine explained it best. Bob from Liberty Coins, and I like the guy a lot. Super smart, comes up with more technical stuff. Again, one of my favorite posters on my forums and stuff that I like to read. Again, a regular coin guy. Started out in the coin business, watches the precious metals markets, but again, really smart. Not one of those people that, let me tell you something. The Wall Street Journal and CNBC, and other than Peter Schiff and a few people they have on occasionally, these corporate business publications don't know shit from Shinola on gold and precious metals and silver. They don't know shit from Shinola. Trust me on this. They talk out their ass all the time. And then you get guys that you meet throughout the world online or whoever it may be that are like Peter Schiff. I like Peter Schiff a lot. I think he's very bright on precious metals. But my friend here, who nobody knows, is a small, I won't say nobody knows, that's not nice, but he's a smaller deal like myself, but he's smart. And he kind of said exactly what it was. Yesterday it was announced that the federal budget deficit for the fiscal, and I'd like to thank you, Bob, for posting this, year ended September 30th, 2010, was $3.1 trillion. That was yesterday it was announced. Now, this may have an effect on gold, highly likely, more than what Trump says, and this is probably what it really is, not what we just saw. By far, it is also the highest percentage in the relationship to gross domestic product since 1945. Wow. But one thing to keep in mind is that this deficit does not include the growth in the net present value of unfunded liabilities for Social Security and Medicare, which probably adds at least another $5 trillion. Holy smokes, folks. Smokes, folks. Boy, that'll rhyme. What the F is going on here? He's absolutely correct. With the unfunded liabilities, you're at, what, $8.1 trillion? What the F is $1 trillion? I mean, it's gone beyond fixable, in my opinion. I don't know how they're going to do anything, but we're going to get into some super inflation, in my opinion. I don't know how they're going to stop that at some point. Again, the printing presses are firing away. This is why you're going to see higher gold and silver prices. And he talks about this as well. The U.S. dollar index fell 0.68% to close at its lower level since September 18, 2020. The one-day percentage drop was the largest since 2720, closed at 93. So huge drop in the dollar, and its lowest level since September of 18th, and that was last month. So a big drop for a single day, and that's why we've seen our rise in gold and silver. And Patrick, I'm sorry, why did I call him? I gave the wrong name. Patrick Heller, really super smart guy. I think he's up in Michigan or something like that, and he's got a place up there. So if you're listening from Michigan, you got to hook up with Patrick. He's he knows his stuff, and he's got great prices. And he does local only too, like I do. So online, I don't think so. But anyways, I was just saying, if you live up there, the guy's really smart, and he sells precious metals like I do. Let's move along to the Wall Street Journal. And again, I kind of wanted just to see their market page, look for commodities and futures, and see what they're talking about. Nothing about gold and silver. The same article I think I talked about 2 weeks ago is still, no, maybe not quite 2 weeks, but yeah, almost, crap. September 29th is still there. And what are they talking about now? Sugar. Nothing about gold, silver, and precious metals. So, at some point, I'm going to just cut the Wall Street Journal out of my reports because it's kind of useless for us, really, other than seeing what the Dow is, trying to make any correlation there, and seeing what Powell might have said that the Wall Street Journal would pick up, or what, if they're going to be printing more, tightening interest rates, that kind of stuff. Or, black swan events. That's the only reason I look at Wall Street Journal anymore. Nothing about gold or silver here. And why? You know, again, I've always said it and I believe it, they don't like gold and silver. It's not their forte. They don't care about it. Most of the time when they do report on it, they don't know what the hell they're talking about. But again, I like to look here because gold and silver and platinum have a direct relationship with the economy, the dollar, and all the things that they may talk about. So again, my reasons for watching this. Boy, that was a long-winded reason to explain why I don't want to have this on my page and why I do. So I don't know where we go from there. And I'm not sure if that made a lot of sense, but anyway, I explained myself. Going to look it over. Nothing here really, no black swan events, nothing about Powell. White House draws up new 1.8 trillion. Well, there you go, another 1.8 trillion dollars. What the F? Right here, let's put this. What the F? I didn't say it, Marcel. Save you some bleeping there. But anyways, oh my gosh, they're just spending it. They're it's I'm speechless. I'm speechless. Anyway, yeah, does this have an effect on gold and silver? Sure, in the long term, it certainly does because they're just printing their way out of this and giving relief. What that means is free money, but that actually is money for votes. The only reason they give us money, folks, is for influence and to get voted in office and keep their asses voted in office. Anyway, I shouldn't say. I'm not going to digress into politics. And let's move along to the one thing that I haven't talked about. I used to do at the beginning of the show, but I'm doing more towards the last of these little shows. The prices. Wow. Wow, 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 wow. I was blown away this morning. Look, 1888. And then all of a sudden I get this morning, I'm saying like 1900, a high of 1930 in New York. New York ended up closing at 1950. Silver at 25 bucks. What the? I didn't say it. I didn't say it. What the Frank? What the Frank is going on here? My gosh. Sorry, I didn't mean to pop that back over there, but wow. Silver is the crazy one. Gold does lead, but it's like the steady big brother. Silver kind of like looks at gold and follows it and then turns in the other direction, gets lost for a little bit and says, where the hell did he go? And just runs up to the price. Anyway, strange analogy. I hope you got that one. And platinum, plodding along, just like I said, up, 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 29 bucks here. But no less, plodding along. I like to call the gold the big sibling, the oldest sibling here, the wise one that kind of moves purposely one way or another. Silver, I'd like to call the middle erratic brother or sibling. Let's call that the erratic sibling, because when gold starts to move, silver does follow it, but when gold goes down, it's erratic. I mean, it makes big moves. You got to have a strong stomach. Look at that, 120, $1.23 change. That's huge, man. That's a big percentage there. Those are big percentages on a daily low. And look at this, 23.83 to a high of $25. What a wild and crazy metal silver is. You got to love it. You got to love it. I think your biggest gains in silver are in silver, but I think your biggest stomach aches if you watch the market every day are silver too. Platinum, man, if you like a sure bet that just moves slow and just follows the crowd slowly, follows the big brother, make sure big brother doesn't fall off a cliff somewhere and just goes real slow, that's platinum for you. I like platinum just kind of moving along slowly, but no huge moves. $29 not bad for a metal that's only $800 if you think about it. Because look, $30 and gold's almost double the price. So really, that's actually quite a good gain percentage-wise. Let's take a look at the world spot prices. There will be no aftermarkets tonight because the markets are closed for Friday. And wow, with the dollar strength, it's such a strong reaction in gold and silver. I've always said because of trends that I think because the world spot prices usually, if they're higher than the closing New York spot prices, and which this is, and it's closed, there's no more market, this would normally indicate to me that Monday would be a higher par value or higher day for gold. I'd say the same thing for silver and the same thing for platinum. The only problem is that today's reaction in gold, silver, and platinum was such an extreme that I think that we could see a little pullback because it really was. I mean, look, $36, $1.31.24. So while I'd love to say that the trend is typically for the world spot prices to lead for New York the following day, and in this case it would be Monday. Well, maybe not Monday because the markets are closed. Maybe, I don't know. No, world markets are closed or open, I believe, on Monday. So, the truth is that the truth is typically I've noticed that when the world spot prices close higher, that'll lead New York to close the same or higher the next day. But like I said, with this anomaly and higher prices in precious metals that went up so dramatically so quick, My prediction for Monday in world markets is going to be a little bit softer, maybe, unless the world markets are just heated up. And world markets are typically quiet. New York may not be open Monday. In fact, I think it's a holiday. So I suspect New York will maybe open higher on Tuesday. Depends on what happens on Monday in world markets. But listen, these up and downs are going to be dollar related. Dollar strength can only happen a short amount of time. I do not believe that dollar strength is anything that we're going to have to worry about in a long-term scenario, because really over the course of history, if you did your homework, or you're going to do your homework about Bretton Woods Agreement and fiat currency, you know that dollar always loses its purchasing power over time, and gold and silver have always continued to maintain it or rise above it in history. This is a historical fact. There are little short periods where this is the opposite because the dollar has some temporary strength, but all fiat currencies fail. All fiat currencies buy less over time. And that is a wonderful environment for gold, especially in an accelerated period we are in right now. Accelerated loss of the buying power, accelerated devaluation of the dollar, accelerated this or that. Great environments for precious metals. Anyways, I think that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. And actually, that's a good way to end it. Look at that. Wow. I'm going to update that page before I go into my closing because, let's see. Thank you, Windjammer Beach Cam, by the way. Marcella hates it when I do these almost closings, but I didn't quite do it yet. Hey, listen, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea, especially beautiful right now. Thanks for watching. Make sure you like my videos. Hit that bell that's up in the right-hand corner, and you'll get updates when I do my new daily videos, plus our pro tips and our other helpful videos. And that's really about it. Talk to you on Monday. Have yourself a great evening. Good night.